All right, and I have the pleasure of introducing our next panel. So I'm Robert Brooks. I'm the founder and CEO of Forsen. We make manipulation intelligence for robotics and physical AI. We do everything from the sensor hardware, so the fingertips, tactile sensors, joints and wrists, all the way up to the force language models that let robots interact with the physical world and actually get work done. We're going to be raising a Series A, and we're looking for strategic investors to help us scale the hardware and build out our models. So without further ado, I am pleased to introduce the corporate complement, the power of CVC in today's market. And I'd like to welcome our first speaker, Lena Ambrozy from Henkel Ventures. Come on up. Our next speaker is Takuya Odagiri from Mitsubishi Corporate CVC. Jen Tsuchikawa, thank you, from TNT Business Associates, and Rob Carlson, who I should definitely be able to promote because that's my name too.
Thanks, Robert.
Yes, from Sidleyc.
Thank you. Thanks. Thanks, Robert.
Thank you, everyone.
Hi, everybody. It's a real pleasure to have the opportunity to interview Gen, Tak, and Lena today. I will go ahead and have them each introduce themselves, tell them about themselves, tell them about their CVC journeys, the CVCs that they work for now, and a little bit more about their organization and where their CVC invests. So, Gen, you want to go ahead first?
Sure. Again, I'm a long-timer in this conference. Probably this is my 10th time. I come from Tokyo. Because of global warming, the cherry blossom season has accelerated, and so it should be in full bloom by the time I go back. So people who want to come with me, let me know. So at Sony Ventures, basically, I started from scratch. We grew the fund to 500 million-ish. We brought in outside investors, and I found a great successor last year and handed over to him, and I'm in transition mode right now. So happy to have a discussion today.
Tak?
Hi, everybody. My name is Tak, working for Mitsubishi Corporation, which is global conglomerate based in Japan. And I'm working for the newly founded corporate venture capital named MC Global Innovation with a $300 million budget focused on the United States market. Very nice to meet you guys.
Hello, everyone. I'm Lena. I'm part of the Henkel Ventures team. So this is the venture capital arm of Henkel. It's a big chemical company based in Germany with like two main business units. One is the consumer brand side and the other adhesive technology. Some people ask me if it's Henkel's by Zwilling and the knives. No, it's the other Henkel. And we have two funds, each 150 million, so now 300 million asset under management. And we invest globally in different search fields like material science, industrials, longevity and beauty, and digital commerce. And we are, regarding the strategic fit, because it's the most questions we're getting, we differentiate a little bit between actionable and potential strategic fit. So over 50% of our investments we do in so-called potential strategic fit investments where we see disruptive technologies, where we believe they will be relevant in the next 5 to 10 years for Henkel, but there's no strategic fit or partnership right now. And I'm happy to meet you guys.
Great, thank you all. So we could go into a little bit further into each of your CVC units and how do they fit within your larger organization. Maybe Lena, I'll let you go first since you went last in the last round. How do you, what's your reporting structure? How are your investments approved? How does your CVC unit get funded by the larger corporate parent?
Yeah, this changed a lot the last years. So since beginning of this year, we immediately reporting to the CEO of Henkel, which is a huge support for us, definitely internally and externally. And I don't know how many of you know, but Henkel is 60% family owned. So the family is still also in the advisory board, but both the CEO and the Henkel family are both really high supporters of corporate venture capital. And I think this is very, very relevant because I'm talking to a lot of CVCs who are struggling. The CEO is changing and there's not really support, but we have the family of Henkel in our back, which is very, very relevant and helps us a lot to find also good deals and being visible. And this changed this year, and I must say it helped a lot internally with alignments, and it was truly a time saver.
Excellent. Tak?
Yep, so give it a little bit context, but Mitsubishi Corporation itself is very large conglomerate, investing from mining, gas, and retail, and automotive. And each business unit had originally had the CVC, a small CVC, but our leadership's concern is we couldn't deploy our capital into, as we call, white space, such as technology area like AI, biohealth, and robotics. So that's the background why we launched a new corporate venture capital in 2025, mainly to cover the AI and technology area. So AI, biohealthcare, and robotics are our focus area. And structurally, it's under the CEO office, and it's separated from each business unit. So we established a new entity based in Japan, and we have our own budget, $300 million, and we have our own independent decision-making processes in IC. So that's the structure of MC Global Innovation.
Good?
Yes, so this goes always to the point that every CVC is different, and I totally respect Henkel's case, but in Sony's case, I think because we're a conglomerate, like you, we're a conglomerate, and there's a pretty strong management function around the CEO. The CEO basically said, "I'm going to stay out of the decision making because if I stay in the decision making, it's going to become too slow." And so we report to him, but it's really a different management structure compared to Henkel. So that's, I think you guys are great, but at the same time, I think that's the path we chose.
So you've got the freedom to operate more within that structure.
Yeah.
Yeah, good.
But I think it's also important that that the CEO is not part of the IC or do the decision making. I'm totally with you agreeing that.
Let's just make sure the CEOs aren't listening to this program.
Yeah, we basically set a framework from the beginning saying that, to do a deal, 6 to 8 weeks is basically, and we put the target there, and so that's another reason why the CEO said backed off.
So that gets to the larger point of CVCs operate in this kind of interesting intersection between they work for a larger corporate parent, but they also are working with founders and executive teams of portfolio companies. So in each of your cases, I'd like each of you to, you can go in whatever order you'd like, talk about how do you, in your role, manage both the process with the portfolio companies as well as with the business units or the C-suite of your own organization.
You go first.
So I'm going to go first.
You've been nominated.
Yeah, from the middle. So as a CVC, I believe that part of the most important job is to communicate with business unit and your management frequently. So we typically have a kind of monthly meeting with each business unit about discussing their interests each and to understand what they are pursuing, and also with the CEO and the management as well, so that we can discuss with startups and sourcing activities effectively to understand the business unit's intention as well as management intention. And we try to align our investment strategy with the corporate strategy as well. So that's, periodic meeting with the business unit and the management is pretty important for the process. Yeah.
Lena, you want to
Go ahead.
again?
So, frankly speaking, CVC is a very tough job because I've run investor relations, I've run global mergers and acquisitions, I've run global business development, but I went into CVC and what I experienced was something that was the most, you need so much effort because you need to be loved by the corporate structure, and you also need to have a very great reputation in the venture community. And and the venture community needs management, and the management needs the startups. So it's there's so much going back and forth. So I felt it was the toughest job I had out of the four. I explained.
Mm-hmm.
Yeah, because you need to keep the relationship right externally, but also internally. You need to know what's going on internally regarding restructuring. I mean, as I said, we do over 50% of the investment in potential strategic fit investment. So there is no strategic fit. So we have to find on the way the right momentum when the collaboration makes sense and when to introduce the founder and the team to the business unit. Sometimes we know some things, what's going on, the portfolio company maybe is pushing, and we're like, we need to wait. Trust me, another half a year, and then it makes more sense because it will save your time and costs if we do it a little bit later. And I think you need to have this role and to navigate between the corporates and the business units and the portfolio companies.
Yeah, I just want to expand a little bit on that.
Please.
The thing is, we were sort of discussing this in the pre-session, but so there's one case that Sony made a $1 billion acquisition in a company called Crunchyroll, anime, manga related, but so you talked about timing, so I'm just going there, but so we knew the company maybe 8 years before the acquisition. It was a small, 10 people, south of San Francisco. And, we've been following the company since. But at that point, 8 years ago, we made a conscious decision that this is probably not the time to go in. Because if we acquire them at this point and think about having them continue to grow based on venture funding, it's probably the case that they will continue to grow with venture funding more. And we just considered to observe them, but they kept on growing and became a big company. And then we thought it was a good time to make the final move. So I think there is a timing context in terms of how the corporates could add value. And I'm not a big fan of counting the number of POCs you do. It really doesn't make sense. It's really what type of situations can you add value, I think, is the most important aspect of this.
I can't remember again, in that example, was Sony actually an investor in that company, or was it just a commercial relationship where you were monitoring and then decided later to make the acquisition?
So there was somewhat of a loose commercial relationship, so that going in, so it was somewhat close to the business areas. So if we were going in, we were going in a more major way, but we felt, there were very aggressive investors coming in to really try to grow the company. So we thought that was probably the better solution at that point.
I guess then that leads to another related question for me is how do, CVCs, there are different ways to measure the value of a CVC within a larger corporate parent. In that situation, though, there was no, again, investment made. So how does CVC essentially prove its worth to the parent? Remember we were following that company a long time ago. How do you do that, communicate that internally? Back to you or anybody?
Well, no, I think the role of CVC is of course when you need to make financial returns on the investment, but the role is really the interface with the startup community and to make management aware of what's going on in the world, and then if you can communicate correctly, I think it's there will be a mutual understanding of when things should happen. I think. I think what the management really appreciates when situations when, you see something happening in the startup market, and that you sort of whisper that to the CEO, and apparently at the same, maybe a little bit after that it will be optimal, but the business groups would come to them saying that these things are happening. That's the type of situation, that's the type of air you want to create, and I think we've been successful in doing that. So.
It sounds like Henkel, you have some of those same, you don't have that specific example, Lena, but you've had some of that same success given the structure of the company.
Yeah, of course, there's always the question okay, what's the strategic impact and how can we measure that? And I think here it's very, very relevant that you have the understanding on the IC side, on the board side, that they know that it takes some things take longer, and you have to put a lot of effort in to build up relationships, and of course you want to have maybe then a strategic fit, but it's long term, right? And maybe there's no strategic fit right now, but at later stages. But of course also we measure our CVPI of the fund, and I mean we don't need to hide with our performance, so I'm really happy about it, but of course they also want to know what the strategic impact, but this will take for longer.
Yeah, on top of Lena's comment, so we have two major criteria for our investment. The first is creation, and the other is a measure of the enhancement. And in terms of enhancement, it's a shorter term returns for the company where we can, if we can give some, technology or products to our subsidiaries, that will create kind of the efficiencies or margin increase. That will be the enhance. And it's easier for us to show the enhancement for our subsidiaries, whereas creation, that means to create a new business with that startups. That is far longer, processes, and it's impossible for us to do that right next year or in 2 years. But management sometimes require us or want us to show that in shorter terms. So we have to manage that expectations and ask them to wait for a while until startups becomes bigger and grower, so that we can create the real business in the future. But we have to manage that expectation from the management and the situation of the startups and the balance between those two. So that's one of the major function of the CVC.
I can't believe we've gone 17 minutes and I haven't said AI yet, so I feel like I have to. But it's kind of two parts. How do you use AI now in your deal sourcing? And where do you see AI opportunities, whether it be physical AI that we've been talking about a lot, the AI, other opportunities, where do you see it, I guess, in both those cases? And Lena, do you want to go first on those two questions?
Yeah, sure. So I mean, in the short term, of course, and mostly every VC or CVC using AI, especially regarding due diligences, deep dives, analysis, and portfolio management. But I think in the long term, it will also help us regarding prediction for strategic partnerships. And I think this will be a very, very valuable effect for us to have this on board.
Mm-hmm. Tak?
Yeah, at Mitsubishi Corporation CVC, we are trying to do two initiatives right now using AI. One is to automate our investment process, so especially for due diligence. So typically, due diligence is done by human, researching the data room and creating a report. But right now, AI can do all of those processes. So basically, we are talking with one specific startup to automate our investment due diligence process using AI. And that's the one initiative. And the other is connecting our CRM systems with Databricks and create a kind of platform where all corporate people, employees can search what is CVC now looking for, or what kind of startups are in the portfolio of the CVC connected to their business unit. They can search it by natural language, so that we can enhance and accelerate the collaboration between the business unit and the startups. So we are not trying to create that kind of platforms by ourselves. So those are two initiatives we are working on.
I'm a big believer in physical AI, and compared to the SaaS area, the role of the corporate is so large. Supply chain, manufacturing, deployment, you name it. And so, the way I think the corporates really need to think through, they have the capabilities, how to interface with the startups in what way for physical AI, I think is going to be a very major subject going forward.
Yes. So I think we're about out of time. I guess I'll give each of you one brief, if there's anything you would advise other CVCs, an action to take, what would it be? Again, you started one,
okay.
So you should.
So please be in this game for the long run. There was a period that Sony did not have a CVC, and suddenly a small company called YouTube with 10 people visits us in our San Diego factory. Those things happen. when you don't have a CVC. So just please continue.
I believe the power of CVC is the consistency, longer terms. So yeah, by myself, I will be trying to be consistent to support startups, like for 10 years, be consistently and persistently. But even if we miss the one opportunity to go to market or collaborate with the business unit, the important thing is to keep working on that with business unit and the subsidiaries. So yeah, I will try to do that. So please let me know if there's any opportunities to collaborate with. Thank you.
Yeah, maybe one advice for CVC teams. I think it's important to have the startup hat on in terms of confidentiality. I mean, we talked about it yesterday. I mean, if you share sensitive data to the business unit, it can ruin your reputation, and not your reputation, of the whole team. So I think this is very necessary. I mean, it takes years to build trust, but it takes a second to ruin it. So always have the startup hat on.
Great. Well, please join me in thanking our panelists for today. Thanks.
Thank you.
Take a picture.